We'll start with the economic realm. Korea's central bank cut its key interest rate today to an unprecedented low of 1.75% in an attempt to revitalize the economy.
But the move has further prompted concerns about the impact it could have on the country's snowballing household debt. Joining us live at the news center with the details is our Hwang Ji-hye. So Ji-hye, what was the bank's explanation for the cut today?
Well, Hyung-kyung, today's rate cut by a quarter of a percentage point to 1.75% leaves the key rate at a historic low, as Daniel just said, and marks the third cut in less than a year. The top central banker said the economy's current recovery momentum is too weak and that it could hurt the country's growth potential. Take a listen.
We drew the conclusion that the pace of recovery in domestic demand is not meeting our forecast for January. And since we agree on the downside risks, we thought it was better to act preemptively.
And Korea's major economic indicators were actually all down this year. Output, consumption, and exports all plunged, while inflation would have dropped last month if it were not for a tobacco price hike. The central bank's move also comes amid a wave of global monetary easing that China and the Eurozone countries are engaged in.
Well, there must be a lot of gloom and concern about the lowered key rate. Now, for example, the household debt issue.
Right, of course. In fact, household debt has been one of the major sticking points among the monetary policymakers, as the total debt already exceeds $950 billion. The government's deregulation drive in the housing sector and the two rate cuts in the second half of last year worked in tandem to boost housing loans. With a historically low key rate, there are also mounting concerns about a massive capital outflow due to a possible rate hike by the U.S. Federal Reserve in the coming months. Whether the rate cut will help boost the economy also remains unclear, while some analysts say the two previous rate cuts did have an impact on propping up home transactions. The record low key rate also raises concerns about the central bank's independence, as recent remarks expressing worries about the sluggish domestic demand by the country's finance minister may have pressured the BOK to cut the key rate.
Gia, so the big question now is how long will this monetary easing policy continue? I mean, did the governor say anything about what action the BOK might take next?
Well, the BOK governor, Lee Ji-hye, said today that the central bank will seek expansionary monetary policies until the economic recovery becomes tangible. But he added that the current 1.75% key rate is sufficient enough to support the country's recovery momentum, signaling that the current key rate will remain intact unless the economy is on track to a solid recovery momentum.